United Healthcare's management team, in their most recent earnings conference call with Wall Street analysts, elaborated on why the company underperformed in the most recent quarter. They also talked about their revenue outlook for 2025, which they then took back, right? This was about a month ago. And then 2 days ago, they removed that guidance. But I think it's still important to evaluate what was going on in the business based on what the company's management team said about a month ago and how those things deteriorated in the last 3 or 4 weeks that led to the company, led to the CEO resigning, led to the company removing their outlook for the rest of 2025, and subsequently the stock price crashing in response to that removal of guidance. And then, of course, the reported criminal investigation, which then the company denied. So there's been so many changes at the company just in the last month. And so I think it requires more due diligence from investors to try and wrap your arms around all of the things that are happening at the company.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So I'm glad the company talked about the fact that healthcare costs more in the United States than it should. And when we say things like more than it should, it's hard to quantify what should actually is. But one way you can do that is by comparing healthcare costs in the United States to healthcare costs in other countries. And the company gave us some insights into that figure, saying that common procedures such as heart bypass surgery, spinal fusions, and heart stents are 4 times as expensive in the United States as they are in Germany, Australia, and the United Kingdom. 4 times as expensive in the United States than in those other countries. And what's driving those costs? Because it's not like we have some technology here in the United States that delivers better health outcomes than they have in these other countries mentioned by the former CEO, Andrew Witty. So what's driving those costs? And one of the reasons why I believe healthcare costs so much in the US compared to other countries is because of the bureaucracy, the moving parts, the complexity of our healthcare system. Is it private? Is it public? The government pays a lot of the healthcare cost. Private sector pays some of the healthcare cost. So there's a lot of moving parts here in the United States, a lot of question marks that leads to all of this uncertainty. And it's difficult to overhaul and fix the whole system. I certainly don't have very many ideas on how to improve the healthcare system. It's so complex. There are so many moving parts. It's so important that it's not something that you can just, say, all right, let's tear it all up and let's start from scratch, because this is just not, it's clearly not working, right? If we look at the evidence, healthcare costs 4 times more expensive. Some some medicines, some prescriptions cost 10 times more as they do in other parts of the world. So it's clear to everyone that it's not working very well. And when you have a situation like this, one thing you can do is just tear it all up and start from scratch, because you're probably not going to get much worse if it's already this bad. But healthcare is so important that it's difficult to take such a dramatic approach because the outcomes can be devastating, right? People's lives are at risk. So you can't take that experimental approach when people's lives are at risk. If this was just a regular business situation where the only thing you're risking is profits, then you can take a more experimental approach. But when you're dealing with people's lives, you can't take that kind of experimental approach. So I don't really have many ideas. I just know that it hasn't been working very well and improvements are desperately needed. I'm encouraged by the developments in artificial intelligence. And I've been saying in the videos where I'm following AI companies like NVIDIA and AMD and others, that this is an area where artificial intelligence can provide major improvements. And I hope to see more in the coming quarters and years. So just a month ago, the company affirmed their revenue outlook for 2025. They were expecting to generate $450 billion in revenue. It's one of the largest companies in the world in terms of generating revenue, right behind Walmart and Amazon, and up there, I believe, above Apple, and definitely above Alphabet and other large tech companies. So this is one of the largest US companies in terms of revenue and profitability. And for them to be going through such drastic changes and difficulties, removing the guidance, changing the CEO, reportedly under criminal investigation, it's understandable that it's drawing a lot of investor attention. So the company pointed to the pressure in its higher cost was largely contained within the senior business, where they saw a sharp increase in care activities that became apparent as they closed out the quarter. That's interesting. As they closed out the quarter, okay? Now we get some more insights as to why, you know, this earnings call that I'm reviewing here in this video was from about a month ago, around April 15th. And then a couple of days ago, around May 15, I want to say May 14, I believe, when the company held another conference call that they announced just out of the blue. It wasn't scheduled, where the CEO announced the resignation and they also removed their guidance for 2025. And here we get an idea as to why things happened so quickly. The company said that they saw a sharp increase that became even more apparent as they closed out the quarter. So things were getting worse as they were closing out the quarter. And then as the weeks progressed since they held this conference call, things apparently got much worse from there. So things were getting worse, and that trend worsened even more over the few weeks. And that's what led the company to say, all right, you know what? We're going to remove our guidance altogether. So we're no longer forecasting that revenue of 450 billion. We don't know what our revenue is going to be in 2025. And we don't want to tell you what it's going to be because we're not so sure about it either. We also don't know what our profit's going to be in 2025. So they removed their earnings per share profit outlook as well. And so this was really insightful to see how things progressed, how things got worse so quickly for UnitedHealth in the last, I want to say, 4 to 12 weeks. And the company had to take such dramatic action. The CEO took responsibility and resigned. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.